Hello and welcome. In this video, I'll cover how childcare businesses can prepare for tax season. Here's what's on the agenda for us. First, we'll cover how businesses are taxed and how you can get started with your tax preparation. Second, we'll review what things a business owner should be mindful of when preparing their taxes. Third, how you can assess your past taxes. And fourth, how to go about preparing for next tax season and receiving any necessary help. I do want to preface the presentation today by emphasizing the importance for every business owner to seek guidance from a qualified tax professional on matters that are specific to your unique situation. The information we're sharing here results from our own research on child care provider tax returns and guidance from the IRS. Our resources and tools are not meant to provide any specific tax advice or reflect on any certain business situation. Because taxes can be complicated and confusing, there's often a lot of anxiety around forms, audits, and payments. But we want to emphasize that tax season is really an opportunity for small business owners to save money and mitigate any future risks. The guidance laid out here covers three areas. One, the importance of taking time to properly prepare for taxes. Two, analyzing past returns for opportunities that you can capitalize on this year. And three, presenting a free resource that shares information to help you prepare for annual tax filing. Business taxes work like this. Self-employed small business owners are subject to a 15.3% self-employment tax of their net earnings, or profit remaining after all expenses have been subtracted from all revenue. You're also still subject to your general income tax rate on your profit. Essentially, your profit is the number you get when you take your revenue or the money coming in and subtract your expenses or the money going out. When you claim your expenses correctly, you're creating deductions, which reduces your profit and thus could impact the amount or rate at which you get taxed. Properly recording deductions is one of the big ways a business owner can recoup profits and mitigate audit risks. An example is illustrated here. If you bring in $35,000 in revenue and claim no deductions, you'll be subject to self-employment tax on $35,000 and taxed at your general income tax rate on $35,000. If you bring in $35,000 in revenue and claim $5,000 in deductions, your profit is reduced to $30,000 and you'll only be taxed on that $30,000 profit. Again, it's important that those numbers are accurate and not inflated, and we'll talk about audit risk later in this presentation. When you look at the research around childcare business taxes in the past, it's clear that many providers are missing opportunities for deductions to reduce costs and audit risks. To help you assess last year's taxes, we suggest using the Confidence and Quality Tax Prep rubric developed by Luminary Evaluation Group. The rubric is based on a review of 60 tax returns filed by actual childcare providers. Research from Luminary in this area shows that the vast majority of providers are missing or have miscategorized business deductions, and many aren't claiming business expenses at all. These issues can raise alerts with the IRS or increase the chances of expensive and time-consuming audits. There are some commonly overlooked deductions for childcare businesses. The tax return analysis found that 83% of providers are not deducting business use of their home. Business use is calculated by using a time-space calculation to find the percentage of time and space that your home is used for business purposes. This percentage can then be applied to expenses associated with your home, such as rent, utilities, or mortgage. Business-related insurance costs, such as liability insurance, is another commonly missed deduction by childcare businesses. Another is mortgage interest on a business property for programs that are not home-based. For home-based programs, this would have been captured in your business use of home calculation. The cost of supplies is another commonly missed deduction that can add up over time for childcare businesses. And total salaries and wages for the whole year for W-2 employees and for yourself, if you pay yourself through payroll, can also be deducted on your taxes. See our guides here in the slide. Small businesses can unwittingly trigger audits by misusing deductions. This is caused by audit triggers that are automated formulas that flag certain line items or amounts for certain types of businesses. Here are 3 frequently misused deductions that you should be mindful of. First, the line for cost of goods sold, as it is extremely uncommon, if ever, used for childcare businesses. Also, the line for deductible meals. Providers can misinterpret costs here to refer to meals they are serving to children, but it's intended for business-related meals. So a high dollar amount in this line for a childcare program can appear like you're trying to deduct all of your personal meals in your business expenses. And car and truck expenses are a helpful deduction, but you can only claim the amount of your vehicle and related expenses that are actually used for your business. Looking at last year's taxes to assess how your business taxes look is a good way to start preparing for upcoming tax time. We provide the Confidence and Quality Tax Prep rubric for childcare providers as a step-by-step assessment. First, gather your tax documents from last year. The rubric focuses on the Schedule C, or profit and loss for a business, in the 1040, since that's the most commonly used by childcare businesses. Then use the rubric to go line by line on your tax form. Based on the comparison with the rubric, it's easy to tell where you need clarification or further attention or review or help from a tax preparer. It's also important to know that you can revise your taxes for up to 3 years after they're submitted. So if you find places to reduce an audit risk or opportunities for deductions in the past, you have the chance to make the appropriate changes through your preparer or your online tax software. And of course, then you can prepare for next year. There are resources to help you plan for your next tax filing. Whether you choose to prepare them yourself or use a qualified professional, you can refer to the rubric to make sure you're maximizing your deductions and minimizing your risk. And of course, there are free resources to help throughout this process. You can always find resources and training at indianaspark.com/training-calendar or register for free one-on-one business coaching there as well. All the resources are available in English and Spanish to ensure that you have the support you need. Thank you for listening on this presentation about preparing for tax time.